We call it the Netflix version to the old Blockbuster, meaning you can be debt free, you can be tax deferred, right? You can be diversified, you can be liquid, and you can wait on the sidelines in optimal timing and invest when it makes sense for you.
So can you talk about the difference between 1031 exchange and what we can offer with the deferred sales trust?
Yeah, this is important, right? Because the 1031 exchange is something that, unfortunately, the real estate industry, and I'm a part of that. I grew up in the real estate industry. I'm a real estate broker by trade. I started at Marcus and Millichap as a broker for multifamily properties. I still am a multifamily broker. We have a team. We have team and groups across the country. But the biggest challenge with that is we've been taught that that's like basically the end all be all. In other words, we were taught that Blockbuster would be around forever, right? It's the best thing out. There's nothing going to be better. You just keep doing that thing. You swap until you drop. You get a stepped up basis, and it's just this incredible, amazing thing. Now, that being said, there's a time and place to use the hammer. What's called the Blockbuster hammer. You can hammer the nail, right? Like if it works, meaning you have the exact property you want to buy, or at least a really good property you want to buy. You have a great debt situation in place. You have hopefully positive cash flow. You have a good value add opportunity where you can force appreciation by improving the units or improving the property or adding a tenant, whatever it might be. And that way you can defer the capital gains tax. It's a great way to build wealth until it's not. Now, when is it not? During shifts in times of change and uncertainty, right? Which does what? You get what's called your cash flow not in sync with your tax flow, or the biggest one is your debt flow, right? And that's the part where most people are not thinking on a mindset with these three things involved. It's almost like seeing, those old cartoons of Walt Disney and the 1D, right? It's just a flat piece of paper and it's the Mickey Mouse going on, right? And then they went to 2D and then went to 3D. Well, wealth in today's marketplace, we believe you need to have a 3D approach and a strategy that allows you to move in 3D, right? Debt flow, tax flow, and cash flow. So with the 1031 exchange, one of the challenges with it is you're not able to diversify. You're not able to be out of debt when it's not a great time to be in debt. You're not able to be liquid, right? And it means you're forcing typically a situation which you probably is not ideal for you, especially when interest rates are higher than most cap rates. So enter the deferred sales trust. We can solve all of those problems. So we call it the Netflix version to the old Blockbuster, meaning you can be debt free, you can be tax deferred, right? You can be diversified, you can be liquid, and you can wait on the sidelines in optimal timing and invest when it makes sense for you. And that's important, right? Because at the end of the day, what is wealth for except to give you some freedom and help you to make an impact, right? And if you're not having a plan that gives you that time and that flexibility, it can prevent those freedoms, right? And I think about a client of mine, Warren and Catherine. They sold a $2.5 million property. I helped them actually sell that as a broker as well in Sacramento. And they had two twin daughters. They had these two twin daughters a little bit later in life, and they're wanting to maximize their time and their energy. And Warren just retired, working at the hospital for like 25 years. And Catherine is, they wanted to travel, and Warren's finding himself having to drive a couple hours in traffic on the weekends to do something with the property. There was always something. Now they had property management, and the property was a great property. It was actually in Placerville. These are larger units. They're all fully rented and occupied, and good cash flow, about $120,000 of cash flow. But he was saying, Brett, I was finding myself trading a lot of my time and my energy. And typically we call the T's, the toilets, trash, and termites, right? And those are the three big T's, let's just say, of owning real estate. Can be kind of frustrating. And he had these two twin daughters. So he was trading his three T's on the toilets, trash, and termites for his really more important two T's. And the one big other T that's a part of this is the time that it was taking away from his twin daughters at this age where before they're 18, as a good stat I saw recently to help me remind me to stay focused on my kids while they're below 18 is that 85% of our time, Dan, is spent with our kids before they're 18. Right? Once they're 18, it's like they're launched, and we've already spent 85% of the time that we're going to spend with them personally is already gone. So it's only 15% less. And so when he learned about the deferred sales trust, he goes, Brett, I have 15 problems, if you will, 15 units. He goes, I didn't want to trade 15 problems for 30 problems. That's probably just going to increase my time with real estate, right? And so for him, the deferred sales trust unlocked that freedom of time and energy to spend with his family. Plus, guess what we also did? We increased his cash flow. So it's not just a freedom part of it. It's also, we're looking at the cash flow. What was cash flow? Went from about 120 to about 190. So he's like, Brett, I can increase my cash flow by 70,000. I can get rid of the termites, the trash, the tenants, as far as the responsibility. I don't have to deal with rent control or increases in life and insurance for all the insurance going way up. The fires, all of the challenges that California brings, and I can go and not have to worry. He goes, Brett, I didn't know how much of a weight this was on my shoulders until about 3 months afterwards. I'm going, oh, this is nice, right? So that's the big part of why we really focus on that time piece versus the 1031 exchange.